Okay, ladies and gentlemen, thank you to this program we have this evening through M&T Bank. Our presenter this evening is Jen Peel. The program is called Credit Scores and Reports. If you could all remain muted, unless it's a very important question, and then Jen has said you can unmute yourself and ask your questions. Or if you would prefer, you can put it in the chat, and then I will ask Jen the questions either at the end of the program, or if it is important enough that we need to talk about it first. Jen, welcome to the library, and please present your program.
Thank you, Jean Marie. Good evening, everyone. My name is Jen Peel, and I'm the branch manager here at the M&T Bank in Parsippany on Baldwin Road. So I'll tell you a little bit about M&T Bank. M&T Bank is one of the top 20 full-service US-based commercial banks with 17,500 employees and a long history of community-focused banking. Founded in 1856, M&T provides commercial, retail, business, investment, mortgage, and professional banking services through more than 700 branches and 1,800 ATMs throughout New York, Maryland, New Jersey, Pennsylvania, Delaware, Connecticut, Virginia, West Virginia, and the District of Columbia. In addition to banking products, M&T and its subsidiaries offer customized private wealth and institutional services through Wilmington Trust, one of the largest personal trust providers in the US. One thing that sets us apart is our culture of community involvement. So we want our communities to understand that they can rely on us to get involved and help them grow even stronger. We take an active role in the communities we serve. In 2019, we gave $34 million in grants to more than 3,500 not-for-profit organizations to support and revitalize communities, help charitable organizations, and grow local economies. Also in 2019, our employees reported spending 293,848 hours volunteering and donating over $1.2 million to their local United Way. So with me tonight are some of my bankers, and I'm going to have them take a minute and introduce themselves. And after the presentation, if you have any questions, please come visit us at the branch. We're more than happy to help you, and we're looking forward to tonight's program. Go ahead.
Good evening, everyone. My name is Dennis Halisi. I'm one of the senior bankers here at the Parsippany branch, and I actually work with with clients that are consumer clients and small business clients.
Hi, I'm Seema Patel. I'm a universal banker, and I'm at the Parsippany office. Hi, my name is Nicole Shemiak. I'm a universal banker at the Parsippany branch, and I've been in banking for 22 years.
All right, thanks, guys. All right, so welcome to our workshop on credit scores and reports. So let's take a look at the agenda for this workshop, and we'll learn about some of the topics that we'll cover. So by the end of this workshop, you will be able to explore the importance of credit scores and reports, learn how to access information about credit scores and reports, discuss strategies to build and improve credit, and identify how to protect credit from incorrect claims and fraud. Your credit can have a big effect on your financial life. Your credit report provides a snapshot of your financial habits that financial institutions, cell phone companies, credit card companies, and others use to get a sense of your credit worthiness. Understanding how credit scores and reports work can help you keep your finances healthy and help you achieve your financial goals, such as buying a home, leasing a car, or paying off debt. So how well do you know your credit score? And if you want, you can respond in the chat. You either know it exactly, you have a rough idea, you don't know it, or you don't know what a credit score is. Once you kind of have a sense of that, before we get into why credit scores are important, let's discuss what they actually are. So a credit score is a 3-digit rating that tells a lender how likely you are to repay your debt. Different lenders use different criteria to calculate it, but in general, the data is grouped into 5 categories: including payment history, amounts owed, length of credit history, new credit, and credit mix. Poor credit is less than 579. So people with this score could probably use help to rebuild their credit history. Fair credit is between 580 and 669. So in this range, it may be difficult to qualify for loans, but if you do get a loan, it's going to be at a higher interest rate. So good credit is between 670 and 739. So if your credit is in this range, you may have blemishes on your credit report. You might be restricted to higher interest loans, but you probably are able to qualify. Then very good credit is between 740 and 799. So in this category, you'll qualify for most loans, and you probably have a solid credit history with a few missed or late payments, or your credit history just might simply be shorter. So any credit over 800 is considered exceptional. So in this range, you have the strongest credit history and you qualify for the best loan terms and interest rates. So your credit score could be any of these, different categories, but what if you have no credit history at all? So many people, especially young people or people who have recently immigrated to this country, have no credit history. It's not a bad thing. It's not the same as having poor or bad credit, although people without a credit history may face similar difficulties in getting loans or providing their credit worthiness. However, there are many steps you can take to start building your credit. So step one, you can open a line of credit. So this could be a credit card through a bank or a retail store, or maybe even a small loan that you can repay on time and in full. Special products such as secured credit cards or credit builder loans are designed to help boost your credit, but they may have restrictions on how much money you can borrow, or they may require you to put down cash collateral. If you've recently immigrated to the US, you'll need proof of address and some form of government issued ID, such as a passport or foreign ID. So step two, you can request that your payment history be reported. If you pay your rent and utilities on time, you can request that your landlord or utility company report that your positive payment history to the credit bureaus. However, remember, if your landlord or utility company is not required, they're not required to do so even if you ask. Step three, which is an optional option, is to open a joint account. So you could request that a family member or a friend with good credit co-sign on a loan or credit application. But remember that your actions will also affect their credit. So we'll talk more about this later, but make sure that you remember too that all joint accounts are reported to the credit bureaus. And then step four is to just pay all your bills on time and in full. Never ever miss a payment. If you think you're about to miss a payment, contact the creditor and see if options are available. But how does your credit score affect your daily life and ability to achieve your financial goals? So let's take a look at a scenario. So let's meet Anna and Bella, who both want to get a home loan. So this is a tale of two friends. Anna and Bella have been friends since middle school. They're both single. They both have steady incomes to pay their bills. Anna and Bella decide to buy homes in their childhood neighborhood. Bella receives a loan without any trouble. Unfortunately, Anna has a difficult time getting a loan. When she finally gets her loan approved, her interest rate and insurance premiums are higher than her friends. So now you know Anna and Bella's story. Let's see if we could figure out a few details. So why do you think this happened to Anna? So credit scores aren't the only factors that lenders consider. Factors such as the market, down payment amounts, loan terms, and lender loan policies can influence the cost of a loan. Still, experts and research show that one credit score has a large effect on the cost of the loan. So as you've seen, credit scores can affect your ability to get a loan, as well as your interest rates and insurance rates. But they also can affect your eligibility for a rental home, as many homeowners and property managers check credit scores before renting to unknown persons. Your credit score can have an impact on many areas of your life, such as getting a car. Your credit score is taken into account for an auto loan. So if you buy a car, it can also be difficult to qualify for a lease with poor credit, and late lease payments can negatively impact your credit score. It can also have an impact on setting up utilities and phone service. So with poor credit, it can be harder to set up an account with utility companies and internet and cell phone companies, cell phone service providers, sorry. Deposits may be required. So essentially, any persons or any organizations that you are seeking credit from may review your credit report to ensure that they're lending to a responsible borrower. So much just depends on this 3-digit score. Who actually comes up with the credit scoring system? So do you guys know the names of the 3 credit scoring systems? If you do, you can either answer in the chat. There are many agencies that prepare credit scores, and they can use different models to calculate them. However, the most popular scoring models are FICO and VantageScore. There are 3 main credit bureaus in the US: Experian, Equifax, and TransUnion. They, along with lenders, use their own version of the FICO or VantageScore credit scoring models. The bureaus keep track of your credit history separately, so it's a good idea to utilize each one. If there are large variations or discrepancies among the reports, you should get in touch with the bureaus to figure out why. Credit scores may also be different depending on the financial product you're applying for. For example, mortgage applications may yield a different score for you than if you were applying for a credit card. So how do you think credit scores are calculated? We'll kind of do a little poll, or you can just kind of think about your answer, but let's try to figure out how generally credit bureaus figure out your credit score. So what do you think is most important, their most important factor? So amounts owed, payment history, types of credit, new credit, or length of credit history. So if you have some thoughts, you can put them in the chat. Just think about it. So as mentioned earlier, different credit bureaus calculate your credit score in different ways. While the bureaus do not disclose the exact methods or formulas they use to calculate your score, we do know the general facts they consider. The most important factors that affect your credit score are your payment history and the amount of debt you owe. So let's take a closer look at these factors and the other ones that make up your credit score. So payment history. So this typically accounts for approximately 35% of your credit score. This primarily includes looking at whether or not you pay your bills on time. Do you always pay at least the minimum amount? If you do, then you're in good shape. If you make even one late payment, though, it will likely have a negative impact. That's why it's so important that you always pay your bills on time and pay at least the minimum amount. Then amounts owed. So amounts owed typically account for approximately 30% of your credit score. The amount you owe depends on 2 major factors. Number 1, how much you actually owe on your credit card or loans. So owing money doesn't necessarily mean you're a risk to lenders. The most important thing is showing that you make regular on-time payments towards your debts. By the way, if you're an authorized user on a credit card or have authorized someone else on your own credit card, their payment history will affect both individuals, so the card owners and the authorized user. So more on sharing credit will come in a little bit. And then the other thing under amounts owed is what percentage of your available credit are you using? So typically people who are using less than 30% of their total available credit would be a lower risk to lenders than people who are using, say, 90% of their available credit. So simply put, maxing out your credit card can negatively impact your credit score. And then next we have the length of credit history. So this typically accounts for about 15% of your score. So credit history is affected by how long you've been managing credit. The longer your credit history, the more information a lender has about your repayment habits and reliability. People with a short credit history, even if it's steady and good, may be at a disadvantage because lenders may consider them to be at higher risk. So it's important to build and maintain good credit early. Then new credit. So new credit typically accounts for about 10% of your score. So new credit or credit that you recently applied for accounts for a smaller part on your credit score. Each time you apply for a new credit card, a lender runs a check on your credit, and this temporarily decreases your score. So it signals that you might be using too much of your available credit. There are limited exceptions. For example, applying for many mortgages to buy a house in a short period of time doesn't tend to negatively affect your score. And then types of credit. So finally, types of credit typically account for approximately 10% of your score. People with a mix of credit types like credit cards, an auto loan, a mortgage may have a slightly higher score than those with only one type. So credit scores are extremely complex, and your actions and everyday decisions can influence your finances. So how about someone else's actions? Can they affect your credit score? So many people think that co-signing on a loan is a helpful action to take, especially if the person is your child, significant other, parent, or a close friend. Similarly, many married couples or people in long-term relationships decide to merge their finances. It's important to know how this decision may affect your own credit score. So let's look at a few scenarios to see how co-signing, merging finances, and sharing lines of credit can affect your credit score. And I'll just pause there for a second. Does anybody have any questions? I know I've said a lot and I've been talking for a while. So if you guys have any questions, want to take yourselves off mute. Or I don't know if there's anything in the chat. Okay. All right, we'll keep going. All right, so we have this scenario with Anna again. So Anna just bought a new house, but it's farther away from work than her old apartment was. So she needs a new way to get to work. She would like to purchase a new car. So she's taken some steps to improve her credit and is now eligible for a car loan. Anna wants to use the loan to get a new car, but she has a problem. She needs someone to co-sign. So should her best friend Bella co-sign on a loan with Anna? What do you guys think? And why or why not?
I don't have enough information to determine whether she should. I don't have enough information. What
Okay.
problem does she have?
So while co-signing on the loan may not necessarily impact Bella's credit score, the loan will appear on her credit report. So
Mhm.
there's really no right or wrong answer, but Bella's credit will be impacted negatively if Anna doesn't pay her loan on time. So when you co-sign a loan, you are promising to repay a loan if the other person does not do so. So if Anna pays off her loan on time, it could actually help both of them improve their credit scores. But if she doesn't repay her loan or she misses payments, it's going to negatively impact both of their credit scores. So applying for a credit on your own or with someone else can affect your credit score. Be mindful of your own credit score before making decisions to co-sign a loan or merge accounts with someone else. Adding an authorized user to a credit card is also a common way to share credit, but keep in mind that the primary cardholder is responsible for paying the bills. If you both use the card responsibly, it can increase both of your credit scores. However, adding an authorized user can be a risk for the primary cardholder if the authorized user overspends. So we've talked a lot about credit scores, but what about credit reports? Are they different? So your credit report is a snapshot of your credit profile, including your history. Every time you take out a personal loan or apply for a credit card, those actions will appear on your credit report. It's important to review your credit report regularly. It's one of the tools to build and maintain good credit. The 3 nationwide credit reporting bureaus calculate your credit score based on the factors that affect it. Many people wrongly assume that checking their credit score or report will affect their credit score negatively. This is not true. In fact, keeping an eye on your credit report can help you in many ways. It can help you detect fraud and maintain or work toward a better credit score. So you can get 1 free credit report from each of the 3 credit bureaus per year online or by phone. So to get your free annual credit reports, you can go to annual credit report at www.annualcreditreport.com, which is the only website that is federally authorized to give you your credit report for free. The Federal Trade Commission maintains it. You can also request your credit report for free by telephone at 1-877-322-8228. So because you can only request Equifax, Experian, and TransUnion credit reports for free once a year, think about spacing out your requests to maintain like an eye on your credit report, like every couple of months, every 4 months or so. Jean Marie, did you have a question?
Yeah, can you pay for a credit report? If you wanted to see it every 3 months, could you pay one of any of these companies to get a credit report?
I believe that you can, but most people don't even utilize for free, the ones that are available. So what we recommend is, since there's 3 that you can choose from, you just get one every 4 months. So you're still checking it periodically, 3 times throughout the year. So once you check it the first time, and then, if there's anything wrong, you can clear it up, and then you just check it again in 4 months. You have the any discrepancies or anything that you see that's different, that you can, clean it up if you need to, or ask questions. So you really probably don't need to pay if you're spacing them out.
Okay.
On Experian, like January picked up Experian,
Mhm.
February Equifax, April, May
Mhm.
Equifax, and then September the Trans. Then she doesn't have to pay.
Right.
Because she's choosing every time different one once
Right.
a year.
Yeah. So if you choose a different one every time, then you don't have to pay.
Cindy said, due to the pandemic, you can check your report on the site once a week. Not sure when this will end, but it is noted on the site when you go there. Thank you, Cindy. We appreciate Cynthia, excuse me. Thank you for that information.
Thanks, Cynthia. And by the way, the participants that are on the call now, after the call is over, we are going to email you a participant guide that will have this in there as well, along with some other information that can help you, and there'll kind of be notes that relate to the presentation today. So you are also entitled to 1 extra free credit report under certain circumstances to verify the information. So for example, if you've had fraud, you are able to review your credit report as a result of the fraud, like identity theft, for example. If you've been denied credit for some reason, then and the denial was based on your credit report, whoever you applied to would be able to provide that for you. Also, if you're unemployed, but you plan to look for a job within 60 days, you're eligible for that. Or if you're on welfare, you're also eligible to get that. So now that we know a little bit about your credit report, we can talk about the credit score. So credit scores, unlike your credit history, are not currently included in the free credit reports, but you can get your credit score by requesting it from the various companies, including the different credit bureaus. These credit scores used to be available only if someone, such as a potential lender, would pay for them. But now the scores may be available for free from a number of different credit monitoring websites. So using these services allows you to check your credit score whenever you want, while monitoring your progress in between your annual check of all your reports. So we'd all like to make more money, but even if you find a new job, it may take a longer time to change your income, especially if you need more training or need to go back to school. So when we do have some control, what we do have is some control over how we manage our money. So once you've requested and received your free credit report, how do you make sense of it? So your credit report will contain 4 major sections. You want to review each section thoroughly for accuracy. Make a note of any inaccuracies or unknown or suspicious details. So we'll get into disputing and correcting these errors shortly. But in the 4 major section, we have the personal information, which contains your name, birth date, social security number, address, as well as the name of your spouse and your employer. Then public records. So this section contains information about bankruptcies, judgments, and any delinquent or unpaid taxes. Your credit accounts. So this section contains information about your debts and whether you've been paying your bills and loans back on time, or if you've been missing any payments or at risk for delinquency. It can include information about both open and closed accounts, and then credit inquiries. So any information about organizations, people, or agencies that have requested to verify your credit in the past 2 years. So there's some information that won't be included, such as medical information, information about religion, race, or sex, information about your checking or savings accounts, information about any debit or prepaid cards, and any private loans that you've received from benefactors, friends, or family. So if you're interested in seeing a sample credit report, you can view one online by doing a quick search on the internet. Experian, TransUnion, and Equifax also offer sample credit reports on their website. So requesting and reviewing the information on your credit report is the first step towards maintaining and building healthy credit. So what are some important things to look for? So let's find out. So it's important to review your credit report regularly to make sure the information is accurate and up to date. Your credit report contains information about your credit history and how well you manage debt. It can also be affected by public records such as bankruptcies, unpaid bills or debts, or how much of your available credit you're using. Most of these types of information can remain on your credit report for up to 7 years. Bankruptcies can remain on your credit report for up to 10 years, and certain tax liens can remain on your credit report indefinitely if not paid off. So look at the following dates carefully: the date your account was opened, and remember the length of your credit history accounts for a good part of your credit score, and make sure the opening dates or closing dates of these accounts are correct. So date of delinquency: review any delinquent loans and check that the dates are accurate and less than 7 years old. Dates of public records: so any public records of legal activity should be erased from your credit score after 7 years or 10 years if it's a bankruptcy. And then dates of credit requests: so whenever anyone, a lender, a financial institution, employer, homeowner, requests your credit report, your credit score may be affected. So just check the dates to make sure they correspond with your events. So if you've noticed any errors, you must dispute the errors with the credit bureaus. So reviewing your credit reports thoroughly is good practice. If you come across information that is incorrect or fraudulent, you can take action. There are some steps you can take if you need to dispute items on your credit report, and we'll review those steps here. So first, write a letter to the credit reporting agency. Tell the credit reporting agency what items you think are inaccurate, and when writing your letter, make copies of all documents that support your position. This letter should include your name and address, copies of all the items in question, and a copy of your credit report with the items in question circled. Then send your letter by certified mail and request a return receipt. By law, credit reporting agencies must investigate the items in question unless they consider your dispute frivolous. Sending the letter by certified mail with a return receipt ensures they will receive your letter. Wait for your results in writing. When the investigation is complete, the credit reporting agency must give you the results in writing along with a free copy of your report if the dispute results in a change. And then 3, send a letter to the information provider. So the information provider is the person, company, or organization that provides information about you to a credit reporting agency. Make sure you let them know that you disputed an item in your report as well. Include the same information, your credit report, a list of the disputed items, and a clear statement of your reasons. Include copies, not originals, of any document that support your request for correction. Mail this request via certified mail and request a return receipt to ensure that it's been received. So you just say, so fixing incorrect information is an important reason for reviewing and checking your credit report regularly. But what happens if you have experienced an unexpected life event, such as a loss of a job, an expensive medical issue, a divorce, and you find yourself in debt? So we'll cover that in a minute. Is there a couple things in the chat? Any questions or anything?
I have a question. You mentioned something about employer would affect the credit score. Why would that be? And what is the reason that they would look at your credit score?
So depending on what the industry is or what the job is, an employer can, in a background check, can pull your credit to see your credit report. So that little pull on your credit would temporarily decrease your score. So that would be a reason that the employer would.
So does the background check always include the credit score?
It not necessarily. It depends on what the job is. Like here at the bank, it is in our background check. So, but it's probably because we work for a financial institution. So not all jobs would require it, but I would imagine any that would deal with in the financial world would, insurance probably would. But if you were just going to, like a retail job, they probably wouldn't.
And
so it would depend on the industry, I would say.
And also, does your employer have to let you know before they do that? Yes, they do say, okay, you will do the background check, but do they have to specify that they will also do a credit check?
I don't know if they have to, but it just could be part of their process.
It's like you indicated, the field that we are in, like FINRA, which is securities, they do inform you that they are going to do a credit check on you, and you will have to sign off on it.
Okay, makes sense. Thank you.
Yeah, so it may just depend on the industry.
Okay.
Yeah, thank you. Good question. Is there anything else in the chat? Okay, all right. All right, so come on. There we go. Okay. So if you've been through an unexpected life event, there are steps you can take to reestablish your credit. And they're very similar to how you initially establish your credit. So step one is to monitor your credit report and scores. Step two is to pay your bills on time and regularly. Nothing builds credit faster than regular and consistent payments. Step three, get credit counseling. So not-for-profit agencies advise people about money and debt management. They help create financial plans, and they also offer workshops. So step four is consider financial products. So as discussed, getting a secured loan or a secured credit card can build your credit. However, there may be trade-offs, as we mentioned, such as fees or minimum deposit accounts that you should understand and ask the financial institution about before you apply. So the Credit Repair Organizations Act helps protect your rights, including preventing credit repair organizations from engaging in deceptive practices such as false advertising that can cause you harm. In other words, credit repair organizations may not overpromise, for example, to delete all bad credit, regardless of whether it is legitimate debt that you have accrued. Also, credit repair services cannot demand advance payment. They must provide contracts in writing, and they must offer consumers cancellation rights. So in the next section, we'll identify potential scams from credit repair companies. All right, so let's learn how to identify some potential scams. So let's return to Anna. So she's trying to rebuild her credit, but she's having trouble keeping up with her credit card payments. So she researched several credit repair companies. So let's see if we can help her figure out what's good and what's bad. So she's trying to rebuild her credit, but she's having trouble keeping up with her credit card payments. So she researches several credit card companies or credit repair companies. So the first company promises to remove bad credit information from Anna's report. All she has to do is pay an upfront fee. Anna's worried about her bad debts, but the company assures her that it can scrub all negative information from her report. The company also advises Anna not to contact the credit bureaus directly, since doing so will negatively affect the company's efforts. So how many red flags do you see in this scenario?
2.
Okay. Anybody else?
Yes, I see 5.
5?
Pay up front.
Mhm.
They'll scrub all her negative. It
Mhm.
will not to contact the bureaus, and it will negatively affect the company's efforts. Sorry, 4. I thought there were 5. Sorry.
Yep. I think 4 is the correct answer. So yeah, so the company Anna found they promised to remove bad credit, which they can't really do that. They can't promise it. They should not trust the company's promise to remove her credit notes for an upfront fee. According to the Federal Credit Repair Organizations Act, credit repair companies must successfully remove the credit inaccuracies from an individual's report and provide proof that the report has been changed before they can request payment for services. And that can take up to 6 months. So that's a red flag. Anna should also be suspicious of any company that promises or guarantees to remove all bad credit. That's another red flag. Anna should not pay anyone fees up front before the services have been delivered. Anna should not trust any company that promises to remove negative credit information that's legitimate. If it's legitimate, it's got to stay. So that's a red flag too. So yeah, Jean Marie, you got them all. All right, yeah, and you can always you can contact the credit bureaus. You're absolutely allowed to do that. That's not going to impact it. So. All right, so to recap, there are many red flags you can spot in the credit repair scam. So here they all are again. We just went through them a couple of times, so I won't read this. But just keep in mind that there's some other signs to kind of be aware of. So don't ever sign anything. Don't put your signature on any blank paperwork. That's a big no-no. Sometimes there's credit profile number scams. So they promise to, get you a new credit identity by issuing you a credit profile number or a credit privacy number that's similar to a social security number. That's a scam. And any agency that encourages you to use a fake social security number or apply for another EIN number for tax purposes is a scam. So EINs are typically used by businesses. They would never be used for an individual in this case for personal reasons. So credit repair companies can help you spot and remove incorrect or fraudulent information on your credit reports, and credit counseling agencies can also help you improve your credit. So if your credit report is poor, you may consider taking advantage of credit counseling services. Many agencies offer a free initial session, and these agencies may help you create a financial plan to decrease your debts. So there's a little bit more information in the participant guide about this that when you guys receive it, you can kind of follow up and look through a little bit more. So if you choose to use credit counseling agencies, look for agencies accredited with either the National Foundation for Credit Counseling or the Financial Coaching Association of America. And look for services such as better money management techniques, debt reduction strategies, and financial plan development, and get information about their services and possibly fees before paying anything or providing any private information. So what other steps do you guys think you can take to improve your credit? Any ideas, any thoughts?
Cynthia, or I think this is Pooja, but I'm not sure because there's just a P.
Yes.
Okay, good. Any suggestions on your end from either of you?
No.
It's okay. Well, we've covered a lot of things that could potentially affect your credit, but the good news is a few good habits and strategies around managing your credit and debt can go a long way to helping your credit score, increase. So here's some basic strategies kind of in review. So use your available credit wisely. Use less than 30% of your available credit and do not max out your credit cards. Pay your bills on time. Pay off your credit card bills each month in full if possible. Doing so shows agencies that you're responsible and lowers the total amount of money you owe. Pay off your loans on time. Not only does defaulting on your debt cost you in fees, but it will also quickly damage your score. Do not apply for several credit accounts in a short period of time. Make a financial plan or debt management plan to reduce debt. Create and follow a monthly budget, and then periodically review your credit report for accuracy.
That's what
being-
Cynthia said, excuse me, just constant monitoring your money and spending. That's what Cynthia said.
Exactly. Being mindful of your spending, monitoring your credit are good habits to develop when building and maintaining credit. So here's a little summary of all the things that we talked about. So your credit score is something that can affect your entire financial life. So make sure to take really good care of it. A good credit score can help you achieve more of your financial dreams. If you have bad or poor credit, don't be discouraged. Keep track of your credit scores on a regular basis and adopt responsible credit habits so your credit score can be as high as possible. It can be an uphill battle. It may seem like it's taking a long time, but making small changes now can have a big payoff later. That's all we have.
Thank you, Jen. That was
Thank you.
excellent. We really appreciate it. I don't know if Cynthia and Pooja have any other questions.
I do. So you were going to talk about what happens in terms of life-changing situation, like if you lose your job or divorce, or I'm not sure. You gave a couple of other examples.
Mhm.
So
Well, all of those things just can cause you, financial stress and lead to, any of these things happening. So any of, situations where you don't pay your bills on time or anything like that. So like, it's just like examples of life events that
Mhm.
could then kind of trigger negative things that happen in your financial life, which then contribute to, an impact on your credit history or your credit score.
Do you think that it's a good idea if you have a life-changing event to contact your credit agency or to contact your bank or, to let them know and give them documentation you've lost your spouse, you've lost your job, so that at least maybe they would be willing to work with you? Do you think that's a good idea?
I think that's a great idea. You guys think?
Yeah,
Seema?
they do. Right,
Mhm.
and the death certificate and everything, and they will change it.
Yeah, so if there's like a spouse that passes away and that maybe they have had some, debt that they have, it's possible for that to be, kind of dissolved or maybe lessened, so that the surviving spouse isn't responsible for all of that debt. So
Right.
yeah, absolutely. Like I would reach out to, credit card companies, or, if you need help or you just need more time. It's always better to send something better than nothing, because then it shows that you're trying and you're aware. It's not like you forgot and months go by. So a little bit is better than nothing, at least the minimum if you can. But always reach out, to either the credit card companies, your mortgage company, your phone bill company, whoever it is, if you're struggling, because in almost all cases, they'll be able to work with you on a plan to get you back on track, And banks are a great resource. We do a lot of debt consolidation. So if you have a lot of debt, on credit cards where interest rates are really high, we can help you learn how to, get the rates lower and kind of consolidate it and cancel some cards. So, you get back on track, and that in turn brings up your score. So.
Right, and Cynthia also said, even with medical bills, reach out and see what options they have.
Absolutely.
Because they can be very understanding.
Mhm.
So that's a big thing. They want you to pay your bill.
Right.
They don't want to eat it. They want you to pay it. So,
Exactly.
wow. I thought that this was very informative, Jen, and I really appreciate you and your coworkers giving us this program. Thank you very much. I appreciate it.
Yeah, thank you. Thank you for your time. And if you guys have any more questions, we're at the M&T Bank on Baldwin Road, kind of diagonally across from the high school, the Parsippany High School. So please come in and see us, and we'd love to help.
Yep. And Cynthia and Pooja, I will be sending you the documentation that Jen was talking about. You'll get that in an email from me from the Parsippany Library. And Cynthia said, thank you so much. Stay cool, everyone.
Thank you so much.
You're
All right.
welcome. You're
Have-
welcome. All right. Thank you, Jen.
You're welcome.
And I look forward to working with you again.
Sounds great.
We'll be doing some other programs. So if both of you, go on parsippanylibrary.org, look at the calendar and see if we have any more interesting programs on how to save money and how to make money.
So it's all about.
All right.
All right. Good night, everyone.